Markets, they trade high after US President Donald Trump. He announced last week that tariffs would not be slapped on Mexican goods. On the back of that, you have the Nikkei that's moved to the high point of the day, sitting with a gain of close to around 1%. The Kospi was high with a gain of around 0.5%. Now that's come off a tad bit from the high point of the day. So that's sitting with a gain of around 0.2%. So that's come off actually considerably from today's peak. While pull up the other couple of markets, both the Straits and the Taiwanese index, the first stick is in the green. The Taiwanese index doing quite well, actually, a relative outperformer today, up close to around 0.8%. All this would mean that after Friday's trading session, where we saw a 100-point pullback from the low point of the day, maybe we're bracing ourselves for another 50-point bump up just to kickstart trade.
Okay, so Asia is in the green, and that is because the Wall Street also ended in the green. The Dow Jones posted its best week since November 2018 as poor jobs data spurred hopes of a rate cut from the Federal Reserve. Remember, US market sentiments were also supported as President Donald Trump announced last week that tariffs would not be slapped on Mexican goods. CNBC's Josh Lipton gets us a wrap of all that action on Wall Street.
U.S. stocks finishing the week with a bang. The Dow up 263 points, the S&P climbing 29, the Nasdaq adding on 126. Those gains coming despite some disappointing economic data out today, with the U.S. adding just 75,000 jobs in May, and that was well below the 180,000 that economists had expected. Worse still, March and April's reports saw substantial downward revisions. Investors seeing the silver lining, though, betting that weak job numbers could mean a rate cut from the Federal Reserve is now more likely. Meanwhile, the FDA and the FTC issued warning letters to 4 e-cigarette companies for violating tobacco advertising rules. Companies are required to include a statement in social media posts warning consumers that e-cigarettes contain nicotine. The letter is part of a larger regulatory attempt at battling a teen vaping epidemic. And Walmart announcing a new in-home grocery delivery program. Beginning this fall in select markets, Walmart employees will deliver groceries ordered online right to consumers' refrigerators. Walmart says it isn't detailing the price of the in-home delivery service to shoppers until it launches.
Well, U.S. jobs data for the month of May disappointed, with the economy adding just 75,000 workers in May versus consensus expectation of over 175,000. Here is some opinion from market experts on the economic slowdown and prospects of a Fed rate cut in the upcoming policy.
This is about a slowdown in the economy that really started in the first quarter. The first quarter numbers were elevated because of inventory growth, but that doesn't really affect jobs that much. So we think this is a natural slowdown in the economy, but I am worried that the tariff talk is making this worse on a global basis. It is adding some drag to the U.S. economy here. So I think the economy is growing more slowly, and at this stage, I think it is quite possible the Fed does cut rates in July.
We have seen a slowdown in monthly job gains since the start of the year relative to last year. That slowdown is in the context of trade wars, and I think that's something that we're really sort of facing a headwind on now. The context is also really important for the Federal Reserve because they are more than willing to do a preemptive cut to deal with the sentiment effects out there. They really saw what happened in December where we had really good data and then had a sentiment collapse and had almost a self-fulfilling prophecy of that pullback in retail and orders and investment. And I think that's something they're very concerned about and cognizant now. And so in the context of the fears we have out there and the skittishness, that's why the Fed is going to take this number and use it as one more reason to do a preemptive cut in rates.
I think it raises the question about whether the trade uncertainty was already having some impact on the economy, prior to the latest escalation as far as Mexico is concerned. This, came after the original tweets about China. And I do think it raises that question. Now, I don't think it answers the question because while both the BLS and the ADP report were both very weak, some of the surveys, including non-manufacturing ISM employment, which is a pretty good survey, were actually very strong. So I don't think it's something that would lead you to, judge conclusively that things are weakening, but it definitely raises the question, raises the downside risks, I think.
Well, in the European markets as well, they ended high on Friday. This has the weak U.S. jobs data that raised hopes of Fed rate cuts going ahead. So that's something that's that's helping those markets move higher. And on the political front, British Prime Minister Theresa May officially resigned as the leader of the Conservative Party on Friday, though she will maintain her position as the Prime Minister until her successor is appointed. Well, in terms of the frontliners, all of them ended in the green, but it was not just the frontliners. The Spanish index as well ended with gains in Friday's trading session of around 0.7%. And even the Brazilian index, remember, post the favorable election verdict, you saw that index hit the 100,000 mark. Then it corrected to around 91,000, 92,000 odd. And from there, it's seen yet another rally all the way closer towards that 98,000 odd mark.
Okay, moving on and talking about the currency space then, the dollar index weakens after weaker than expected US jobs data increases odds that the US Fed would go on an easier monetary policy, while safe haven Japanese yen strengthens versus the US currency.
Okay, then turning our attention to the all-important world of commodities, then crude oil prices hold steady, coming off the 5-month lows hit during the last week. This after Saudi Arabia signaled that OPEC and its allies will continue to extend production cuts.